So I guess to set the scene, we're here in Hong Kong at the Ignite Investment Summit. It's October 2025 and gold's at record highs, silver's rallying. Amid that backdrop, we're here to ask the question, is this junior mining's precious metals breakout year? So I guess, Norman, to start with, in your view, what's driving precious metal prices at the moment?
Okay, thanks, Dannika. So a few factors are driving the precious metals prices. So de-dollarization. The share of dollar in global reserves has declined from 70% 2 decades ago to now around 58%. So part of it has been replaced by gold. The second one is the rising geopolitical conflicts, including the Russia-Ukraine war, the tariff dispute, and all of this make the precious metals, especially gold, safe haven investment. So the third one would be the monetary policy easing cycle in the major economies. So basically, the lower interest rate will benefit cross-border commodity prices, but gold probably will benefit the most, given the nature of the non-interest-bearing asset. So yeah.
And Jorge, what do you think out of those macro drivers or any others is primarily?
I mean, I agree with what Norman said, and I would, just add that we're now in a multiple year where things have been lining up for precious metals, and they continue to, and I think will continue forward. There's definitely the move away from the US dollar, but also the uncertainty that's been generated by the tariff war, the uncertainty that has been generated by the fact that I think it's very clear now that interest rates are going to come down, so people expecting inflation to come back up. Frankly speaking, the governments around the world realizing that perhaps the safety of the US dollar is not where they should be. So I do think we're just at the beginning of a big shift towards gold. I think it's while it's not going to be a straight line up, I do think for the foreseeable future you have significant factors moving in favor of gold.
Samson, do you have anything to add? Do you agree?
Yeah, I think on top of what Norman and Jorge mentioned, I think one important psychological factor is the winning trade usually drives more money buying it. And then another notable observation I have is, first of all, I'm not an expert in crypto, so I could be wrong, but I think like what happened in last Friday is like a great textbook example, like what is the difference investing in gold and cryptos? Because I talked to many cryptos investors, they all said like de-dollarization, diversification, like all the reasoning they have is exactly the same why other people have to invest in gold. But we can see that probably the more wealthier, established investors, they put their money, most of their money in gold, while the younger generations, they usually getting too leveraged to buy cryptos, and then when the stock market crashed in a second, then we immediately know which one is a safer asset.
And so we spoke about gold, but I want to ask about silver too. It's obviously been rallying very hard. Jorge, I did introduce you in your experience. What do you think the global outlook for silver supply is? And do you think we're structurally short new silver discoveries?
Yeah, no, for sure. And, silver is very interesting because I actually, personally, when I look at gold and silver, silver is still, while it's have a tremendous move, we closed Friday at an all-time highs for silver. The silver to gold ratio is still very off. So, typically I mean, historically, silver to gold ratio could be like 15-1. Over the last few decades, it's been more like 60-1 on average. Last week we were at, with the move in gold prices, we were at something like 80-1. So silver is still, relative to gold, is still hasn't had a big move. Yes, there is the question of it does have the industrial usage. Those year to year keep increasing. I'm somewhat follow the retail bullion buying market and sort of newsletters and videos, and for many years now, if and you could try it yourself if you go to the Kitco store or any of the bullion stores here in Hong Kong. If you go and try to buy physical silver, you have to pay first of all a big premium. They're not going to sell it to you at $53. You're going to have to pay, depending on the day or the month, you're going to have to pay maybe $65 per ounce. But also they won't give it to you until another 2-3 months. So the reports from retail buying in the US is that there's a lot of shortage of physical silver. Now, keep in mind that this is like for personal investment. These are guys who are buying coins. So that doesn't mean there's a shortage of silver. Like the industrial buying of silver is done on bigger bars. Those, the moment you don't get, the industrials don't get those, then you'll definitely hear from it. And I've told this story many times, and I think I've told this story in this venue as well. But I had lunch in Mexico City sometime during COVID, maybe 2020 or 21, with a gentleman who runs procurement for Samson for silver in Mexico, a Korean gentleman. And he told me, that one of the things they really worry about is the moment that they don't have enough physical silver, because it's such an important component for all the electronics. So they have deals with different mines around Mexico just to make sure that they buy a year forward of percentage of their production, because they don't want to run through that risk. Now that said, and Samsung used to work for Reuters and was monitoring the silver market in a much more organized way than I am. So maybe he can give a comment. But the one thing is, so far there's never been any disruption to silver supply. Everybody's been getting enough silver. Silver is a very opaque market because a lot of the silver comes as a byproduct of copper or a byproduct of gold. Nobody really knows for sure. But long story short, I think silver, on the back of the strength from gold, when silver has taken off, silver prices have taken off in the past, has very often been driven by retail buying from North America, and I think the things are lining up really well for silver. I think silver, even at these prices, is still an attractive asset compared to gold.
Okay, yeah, and I guess on that, so global gold equities have risen a lot more than silver equities. What do you think? Maybe Norman can start. What do you think out of gold and silver in the junior end is more primed for a breakout looking forward into 2026?
Okay, so the fundamental of silver is in a pretty good shape. So a robust demand and pretty low inventory, and also historically, the silver stocks will catch up with the gold stocks in the precious metals bull market. So basically, I think the silver juniors are actually in a good position to break out, but there's a risk for this thesis in short term. So we all know the big difference between silver and gold is that silver has a strong industrial property, right? So it is used in auto, used in solar, etc. So which means the real economy demand actually affects the silver more than gold. So given that the current surrounding uncertainties between U.S.-China tariff dispute, probably in short term we won't see the silver junior to outperform gold juniors in short term. But yes, after this conflict to be resolved, I think there will be a good chance for the silver juniors to outperform gold juniors for a period of time. Yeah.
Interesting. And Samson, do you agree?
To be honest, I think this is a tough question to answer because it's more like a fundamental against psychological again. Just as Norman said, during the second half of a bull market, the investors getting more excited, hyped, and then they usually going for the more so undervalued speculations. So normally the silver equities could outperform gold during certain period of time. But if I have to go to fundamental, I still think gold equities would be better than silver, especially as long as the gold price remains at strong momentum, there will always be lots of M&As within the gold industry. But for silver, certainly sure, there's also some M&A activities in the silver space. But for now, I think it's still rarer compared to the gold M&As. So if I buy a gold equity, I would have far easier exit strategy, hoping some major would buy my investment out. But for silver, I have to wait.
And we often see a disconnect between the price of a commodity and the underlying equity. What do you think is driving that disconnect today?
Well, again, I think part of the reasons is for the last 20 years or so, the investment market has been, gifting all their money to the tech sector. So in the last so many years, many people, investors, sell side analysts, buy side analysts, they all left the mining space to embrace tech or other sectors. So right now, I think the number of people who truly understand how to invest in mining equities on a fundamental basis are like far in between compared to, let's say, 20 years ago. So I think we start to see the gold equities, the mining equities catching up this year. But before that, the mining equities have been lagging behind the physical price for a very long time. So I think starting this year, the market start taking notice, more people coming back into the mining markets, and hopefully the commodity prices will remain in strong momentum despite up and downs. And then more and more participants to come into the market, and then hopefully there will be a more reasonable connection between the equities and the physical metals.
And Jorge, do you have any comments to add on what closes that gap?
Yeah, it's a very interesting question because we had a very unique phenomenon in this cycle where all of us geniuses who are in the junior mining sector or even investors in gold equities, you don't bother buying gold because you think, look, I'm invested in the equity. So if gold starts going up, typically the gold mining stocks are going to outperform. This time that didn't happen. Gold basically, like if you look at it from 2018, 2019, almost tripled in price. And the mining equities just now began to raise. Even though they've had a tremendous run this year, they're up 80 to 100%. If you think about it in terms of, in that same period of time, gold moved from 3,500 to 4,100 or 4,050. That's even though the equity price moved for the gold equities, relative to the increase in revenues and the increase in margins, because keep in mind, these additional $600 they're adding to the gold price are basically going straight to become profit. So relatively speaking, you can make a case relative to the gold price, the equities still haven't moved significantly. Also, if you look at the price of the gold equities in 2010, 2011, when we had the last big move in gold equities, we're still way off of that. So I think that it's not going to go a straight line. It's going to be a roller coaster like it always is in our sector. But relatively speaking, they're still undervalued. And then, I do agree with Samson that we've been victim of, not just our sector, but every sector in the world has been a victim the macro caps and the artificial intelligence just sucking up all the capital. But you're still in, well, I don't think it's going to be a shift. Like I said, we're going to probably have gold equities crash significantly, but I don't think for too long. And I think the general pattern is going to be going up because, you look at the fundamentals of these companies. They're all have good margins. They're giving dividends. We don't have a lot of companies in any other sectors with with those characteristics.
And Norman, do you think in terms of juniors, are we seeing, if we, given the sort of valuation lag, are we seeing capital come down the risk curve to juniors, do you think? Or is it still at the producer end?
I think on my side, so far the senior miners and the mid-sized miners, they are now trading at a reasonable valuations. So two kind of companies are trading at a discount. One is the juniors. Another one is those mining companies that are struggling in operations. So I saw this valuation catch up from first starts with seniors, then followed by mid-sized, and it's gradually moving to juniors. So lots of deals to be done this year. I think they are actually near-term development projects. So I think more interests are in the juniors. They're catching up. Yeah.
So you mentioned about the awash of liquidity that we're seeing at the moment, and there seems to be a capital raise or multiple each day in Australia, and they're getting done super quickly, especially in the precious metal space. But given we're here in Hong Kong today, what's the sort of sentiment like, I suppose, for Asian capital, and what makes a fundable precious metals junior story for you?
Okay. Yes, I think the fundraising in Hong Kong market also improves, like what you saw in Australia. So let's get some numbers. So in 2024, there were 5 deals to be done on the gold side, and total fundraising was around like $900 million. So for this year, I think for the first 9 months, we saw like already 8 deals done for the precious metals, and also already raised money for around like $5 billion. So a big upside. So yes, definitely we are seeing this interest are backing on the precious metal side in this market.
And Samson, what are you seeing?
Yeah, basically agree with what Norman said. Like, everyone has been dancing, happy because the mining stocks have been strong. I know that there are lots of Hong Kong retail investors. They start investing in not so junior, but mining companies listing in the US. So I see that they're starting like the Hong Kong local people. They just start. They won't 100% investing in tech anymore. Like they go to whenever there is a potential for price appreciation. And obviously, recently it has been Trump. And the U.S. Mining projects have been very hot. So I noticed that more and more Hong Kong market has been taking notice, and they have been joining the search recently.
And Jorge, do you agree?
Yeah, I mean, I agree with you, but I do want to bring one point, which I think it's you probably would be better at explaining it than me, but I don't know. I'm sure everybody followed what happened with the Tsujin spin out a few weeks ago. I mean, that's really remarkable. And it does speak about something very significant. I don't know if you, I mean, giving you have a big of a connection there. It really was something stunning for this market to have a transaction. I think I heard that it was like something like 14 times oversubscribed. I don't think that we've had something like that in precious metals ever before in Hong Kong. So I do think it's something quite significant. I don't know if you have any any comments of what it means for sort of from a Chinese and Hong Kong perspective.
Yes, definitely. We are proud to see this spin-off has been so successful. No, the Tzu International Gold has been to the IPO stuff. Yes, not only of the precious metals, also the brand of the Tzu mining, and then combined to make it the leader of this local market, I think. Yeah.
Okay, and Jorge, you work a lot with TSX listed companies, I understand. Do you think there's any key differences between TSX or ASX in the precious metals junior space around what is getting funded at the moment?
I mean, I'm less familiar with the ASX. There's definitely differences, but I mean, ultimately they're quite similar. And I think that the one thing that I will say is, I mean, ASX has had a much stronger, consistent run over the last 5 years or so. Their cost basis is the Australian dollar, and they, in Australian dollars, gold has been performing for like the better part of a decade. Canada, well, it's it's a Canadian exchange, but the majority of the big investors are U.S. investors, and in U.S. dollars, it's been a rocky ride. And I mean, the ASX, for instance, in the exploration. From my perspective, it's incredible the amount of exploration success. I don't know why, but it does seem to be orders of magnitude the success that in Canada. Part of it may be that a lot of the exploration in Canada, it's seasonal. You have a lot of tree cover, whereas in Australia you have, it's a lot of barren. You can explore year round. What Australians always like to tell me is that they have better geologists than the Canadians, but. Who knows? But the one thing I was going to tell you was, the very similar. Ultimately, I think I think the majority of large investors around the world are agnostic between the both exchanges.
And I guess with my IR hat on, do you have any tips for how global junior miners, precious metals or otherwise, can unlock more Asian capital?
Yeah, I mean, that's for any of you who are here representing companies, I think coming to an event like this is obviously very important. The Asian investors are not, like in Canada or in the US, you go to a lunch and you make a presentation, and then people go and they've never met you before, and they'll get a sub agreement, wire you a check. That's not so much in this part of the world. Like there's definitely there's a feeling from people who invest in the junior market in this part of the world that by the time the issuer, the company, came to raise money in Hong Kong, they probably already went all around the US and couldn't raise money. So okay, let's get on a plane to Hong Kong and see if we find some suckers to buy our stock. So there's definitely a little bit of skepticism of a company, but it's actually not wrong, because I've run TSX companies, and if you can do a quick race in Canada, you don't even bother walking down the street to look for a Hong Kong investor, and then if you're struggling, then you get on a plane and go wherever you have to go. But I would say, like, you have to don't just come to look for capital here when you're desperate, but like if you're going to make the effort to come here, you really have to, like our friend here in the front row, he's here year after year, whether the market's good or bad, and I think he's been very successful at raising money for TSX companies from Hong Kong, probably more than me who lives here. So you just have to come and be consistent.
Okay. And Norman and Samson, I want to get your view on sort of your investment philosophy or process. So if what Jorge says is correct and companies are coming here and thinking, they're going to hoodwink you, what is it that makes you say yes or no to a potential investment? What do you look for?
Yeah. To me, fundable junior miners should have first the high quality resources. So ideally in PEA or FS stage. Also, it has a strong project pipeline, and the management team has a good track record in executing the early stage projects before. So besides this, if they do have a well-designed credit line to support future growth, will also be appreciated.
To me, the most important thing, one of the most important things is you need to work on the right commodity because, well, despite currently we are probably in a commodity super cycle, but not all commodities are the same. For example, right now, critical minerals have been very hot, like rare earths, antimony, tungsten, and then maybe a few months later, scandium, titanium, rutile will be hot. So who knows? So I think for me as an investor, my philosophy is the management of the companies need to do the right things at the right time. So right now, like if whatever commodity is not hot in Asia, then probably it shouldn't be your focus project working on. And then also, just like what Norman said, I paid high attention to the quality of management. I hope the management team is competent in terms of technical skills, honest, and high transparency.
Do you have anything to add, Jorge?
Yeah, and I slightly disagree with Samsung because I think the what's interesting about Hong Kong is that you have, generally speaking, you do have a lot of investors who invest in pretty much every commodity, and I just think it's just more of a matter you have to I guess also different than North America or Europe. The investors here don't necessarily congregate in one event, or people are a little bit more disjointed. So you really have to dig deep to get to the right project, to the right investor. But there's a lot of money in this city, and there's people here. People are not looking at it like in for European and North American investors. Mining and commodities is a more speculative asset class, or it's an asset class that at the end of the day, you know, we don't really make anything in North America or in Europe anymore. Whereas here in Asia, people are seeing day to day, like they're still building cities. They're still, people connected to the big, manufacturing. So there, I would just disagree slightly with Samsung. Maybe yes for like very speculative junior mining companies. But just in general, if you have a serious project, I think there's always a good audience, and it typically takes time to be able to get somebody to the point where they want to make a significant investment.
And do you have any recent investments that you'd like to share?
Well, I'm in the board of two public companies. Sorry, just one now, called Sierra Madre Gold and Silver, which is a silver producer in Mexico. We just announced an expansion plan. We're going to triple production in 2 years. We just raised $20 million from Fidelity and Eric Sprott and management. So that's one that obviously would encourage you to look at. It's listed in the TSX. I'm also an investor in a company called Cassier Gold, where we have 2 million ounces in British Columbia. It was actually an asset that we got to know through your company a few years ago, and then in terms of like sort of other more generic investments, I have been still buying physical silver, still buying GDXJ, like some of the high quality miners, but I am not sure. I do have a feeling there's going to be a hard crash at some point, and I just kind of feel like maybe definitely the junior mining companies are clearly undervalued still. I think the even the mid tiers and the seniors are undervalued. But that said, I don't think it's going to be a straight line up. I think it's going to be a roller coaster, just very much like it's been the last 5 years. It's basically we've been in a slowly building bull market. So I think I would just say if just have to keep that into account if you have a low tolerance for for volatility. Maybe sit it out until you see a correction.
And Norman, do you have any investments that are either on your radar or recent investments that you'd like to share?
I may not be able to say the specific names, Yeah, but we did participate in the gold IPOs in Hong Kong market this year, so which has generated a good return. And also, we have been accumulating long positions in a few junior miners with near-term development projects in North America. Yeah.
Samson, do you have any companies that are on your radar that you want to share?
Yeah. For my own personal portfolio, Brazilian rare earths is my largest position. It kind of more than doubled this year because thanks to Trump. And then I also want to share a name. Yeah, I also want to share a name, Lavoto Resources, LRV. I actually first time met them in your events earlier this year in Hong Kong. I think it's April. I talked to the management. I liked the opportunity. I bought the shares, and then you peaked in May, and then like the shares down, and then I keep on buying on weakness, and then suddenly it shot up from like 70 cents to now $1.30 just in the last 2 days.
Well done. So your newsletter has thousands of followers, mostly retail or a bit of a mix of retail and institutional?
Mostly retail, yeah. I know there's one institution, yes.
Yeah. Well, with that in mind, what advice would you give to any retail investors that are here today or watching this replay online for investing in either junior miners or precious metals at the moment?
I always stress two things. The first one is strike when the iron is hot, and the other one is everyone should do the right thing at the right time. So if right now, if you're convinced that the commodity super cycle continues, then you should continue to invest. Of course, expecting high volatility, but if you expect, for example, the bear market comes today now, then you have to cut loss and sell everything.
Okay, and moving along to M&A, we've been seeing some consolidation at the top end, and Jorge, I guess recently with your recent or script bid, I'd like to know, what do you think about this trickling down to the junior end? Do you think we're going to see more of that next year?
Yeah, no, for sure. It's starting to happen. It's still, relatively speaking, not happening in a big way, but it is starting to happen. You're seeing, companies at the top merging. You're seeing companies, mid-tiers acquiring juniors. For those of you who don't know, until 2 months ago, I was the CEO of a silver company that was acquired actually for cash by Torex Gold, which is a large North American gold producer. That's I think if that transaction had happened today, they probably wouldn't have bought our company because the markets move so much that again, they're a gold producer who's making orders of magnitude more cash and will make more cash. So all of a sudden they can go for more ambitious opportunities, which they have. They made another large acquisition maybe a few weeks after they acquired us, and then you've seen them make bids for other stuff. So it's definitely happening. It's the more cash these companies accumulate and the bigger their market caps, the more it will make sense to have more acquisitions. So I do see that taking place. I think you'll see a lot of what you saw with Sujin, where companies that have both copper, gold will spin out gold because on the basis of such a successful transaction. So I think you'll see a lot of that, and I think now more than ever is the time where that thesis that you invest in a company that has the qualities that the company can be acquired by a mid-tier. That hasn't happened for so many years. And I think now you will, and it's still, keep in mind there is I don't know, between the TSX, ASX, and other exchanges, probably 1,000 plus junior mining companies. It's only going to happen to a small percentage of that. So you still have to go for, my experience from just being through a couple of cycles now is like you go for anything that has like really high quality resource, high grade, good management, good jurisdiction. It's likely to get acquired.
And Norman, what do you think makes a credible takeover target over the next sort of 12 to 18 months in the junior end?
So, pardon me. So, what question?
So, in terms of what Jorge was just saying about if we're talking about junior precious metals or just junior mining companies in general that are attractive takeover targets for larger companies, what are the key things that these larger companies looking for from the juniors?
So I definitely agree with Jorge's comments. So if large companies look at the targets, I think the first one is whether this resource is good in good quality or bad quality. So whether it's located in good or bad jurisdiction, right? So if you are located in North America or Australia, I think it's you get more premium for that, and also the track record of the management team. Yeah.
Samson, do you have anything to add?
Not much, because sometimes I think that when large mining companies make an acquisition decision, it doesn't mean the prey is the best one to buy in the market. Like maybe because everyone has their own agenda. So I just try my best to invest in a few equities that I think have the highest chance to be acquired, and then pray for the best.
Hope and pray is sometimes a good strategy. So we've got a few minutes left, and I wanted to reach out to the audience to see if there was a question that you'd like to ask of the panel. If anyone had a question, just raise your hand. No? If not, we will move on. We've got a quick fire round that we're going to do. So 1 or 2 word answers, if we can keep it to that. Is everyone ready? Yes? Okay. So question 1. Most bullish metal, precious or otherwise, for 2026? Let's go this way.
So for me, it definitely would be silver and gold. And I haven't done enough homework on copper, so I'll skip that. But I'll say it's silver and gold.
Norman?
Gold, copper, and uranium.
Tungsten and rare earths.
Great. Number 2, where's the best alpha over the next 12 months? So there's going to be multi-choice here. A is explorer versus developer.
I think definitely explorer. Again, but I guess you have to make sure the explorer actually has something of value. So if you're new to the sector, I probably would go for the developer, because it's just. But definitely, if you were willing to do your homework, I think the explorers have a lot of a lot more.
A developer, I think, should still be in a better position in the next 12 months.
Yes, same, developers.
Okay, and now developer or producer? I know this is a junior panel, but
No, I would say, you know what? It's just some of these producers are still relatively cheap. So I think you then again, like you could go and take a look at the high cost producers, because they're trading below the high quality producers. So I think I don't know. I think I would say kind of there are good opportunities in both.
I will keep my word consistent. Developer.
Developers, because I think it will be developers who will get the government's money for better development.
And gold or silver in 26?
I think just on the basis that silver still has some catch up to do to gold, I'm going to go with silver.
For 12 months, I think gold.
Silver.
But guys, that was a brilliant panel. Thank you so much for your time. And Dannika, you did an amazing job moderating.
Absolute pleasure to be here. Thank you for the opportunity.